Hello guys, and welcome back to my YouTube channel. In today's video, I will quickly like to show you a simple strategy that you can use daily to make 50 pips whenever you are trading currency pairs such like GBP USD, Euro USD, AUD USD, NZD USD, and its likes. So without wasting much of your time, let's get straight into the video where I will show you all the simple steps you need to follow in order for you to always make your 50 pips on a daily basis. So before I show you this strategy, or before I show you how this strategy works, I need you to know that this strategy works within 7 a.m. London time to 10 a.m. London time. So if you are coming to look for opportunity using this strategy, you need to be in front of your computer, or you need to have opened up your chart at exactly 7 a.m. London time. And that is when you want to look for trading opportunity that is presenting itself. And you can look for that setup within 7 a.m. London time until 10 a.m. London time. Anything from 10 a.m. London time, you are basically on your own. That is first thing you need to know about this trading strategy. And this trading strategy can basically give you at least 50 pips movement whenever you find your setup. And the maximum stop loss you are expected to use whenever you are trading this kind of strategy, which I am going to show you, should not exceed 20 pips. So whenever you want to trade, the maximum stop loss you are expected to use should be 20 pips. You can basically see trade setup that is below 20 pips, but the maximum stop loss which you should use should not exceed 20 pips. And whenever you want to target, you should always target 50 pips regardless of what your stop loss is. So without wasting much of your time, let's get into the strategy, and I will show you step-by-step guide on how you can basically use this strategy to make your daily 50 pips. In order for you to trade this strategy effectively, you are going to need one simple indicator. So you need to go on your trading view chart and locate this indicator which you can see on my screen. The first one, called the Asian Range and Kill Zones, most especially by NSR Group. So that is the one I would recommend for you. Look for this indicator called Asian Range and Kill Zones. So when you are able to find this indicator, I need you to bring it on your screen. So when you have it on your screen, this is basically what you are going to have. So at this top here, you need to double click on that name, Kill Zone. So double click on that name. It is going to give you this platform which you can see on my screen. Then from this, you need to scroll down and uncheck Display London Open. Uncheck it, and also uncheck Display New York Open. And finally, you are going to uncheck Display London Close. And when you do all that, this is basically what you are going to find on your screen. So because this is the indicator which we want to work with, is this indicator that will simplify for us what we are going to do. So without wasting much of your time, let me explain to you how you can basically use this indicator to catch your 50 pips. So let's say you open your chart and you want to trade using this strategy. First thing, you need to understand that this strategy, you need just 2 time frames for it. You need the 15 minutes time frame and you need the 5 minutes time frame. The 15 minutes time frame is where you want to get the trigger. So when you get the trigger on the 15 minutes time frame, then you will now scale down to 5 minutes time frame. That is where you want to pick up your entry from. So, and what is going to be the trigger? So this box, which is the Asian range box here, basically this is how the strategy works. If you come to the market, you don't need to really understand what the trend is or what anything is. You want to see a sweep. You want to see a sweep either to the upside or to the downside. of this box. So you need to watch how price is moving. Maybe price on the 15 minutes time frame is going to close above this box or is going to close below this box, maybe with a full body or with a wick, whichever one. So if it closes with a full body, it's fine. If it only sweep with a wick, it's also fine. So you just need a break, either with the wick or with the body, above or below this box. That is what you want to see, and that happens to be your trigger. And when you find that break, that is when you will now switch to the 5 minutes time frame to look for market structure shift in the opposite direction. So meaning that when you have a break, let's say you have a break to the upside on the 15 minutes time frame, you need to allow the candle to basically close. So the candle that caused maybe the break or the sweep, you need to allow it to close. So the moment that candle closes, you will scale down to your 5 minutes time frame and look for market structure shift to the opposite direction. So if the candle closes above, you need to go to 5 minutes time frame to look for market structure shift, indicating that the price is about to go to the opposite direction. Let's say if the candlestick close below this box, which you can see on my screen, you need to look for market structure shift to the upside. So for every sweep or for every break above this box here, you need to go to the next time frame to look for opportunity to trade in the opposite direction. And let me play this price chart with you so that you can understand what I am saying. So I want you to pay attention to the movement. I want you to pay attention to this movement, as you can see. So now, if you look at it at this point here now, we have a break. So we have a break here. You can see we have a break here with this green candle. So this candle on the 15 minutes time frame caused the break. So now when we have this break now, the next thing for us is to go to the 5 minutes time frame immediately. So on the 5 minutes time frame, what did we want to see? We want to see a market structure shift. Since we have confirmed a break to the upside on the 15 minutes time frame, we want to see a market structure shift on the 5 minutes time frame. And when we get that market structure shift on the 5 minutes time frame, we can now use either the fair value gap that is within that market structure shift, or we can use like a breaker block or a mitigation block. It depends on the institutional reference point that is presented to us on the 5 minutes time frame. So now that we are on the 5 minutes time frame, just like I have said, you need a market structure shift. And you can agree with me that this is a market structure shift on the 5 minutes time frame. So this is a market structure shift on the 5 minutes time frame. So now that we have the market structure shift on the 5 minutes time frame, we want to look at the institutional reference point that is there, either a fair value gap. If a fair value gap is there, we can use that fair value gap to take our entry. But in this case, we have a breaker block here. For those that understand smart money, they will know that this is a breaker block. So now that we have this breaker block, because we didn't have a fair value gap, but we basically have a breaker block. Now I will now set my pending order. I will set my pending order inside of the breaker block, and my stop loss will be, let's say, 18 pips. And don't forget, I told you, you can basically use 20 pips stop loss maximum. But in this case, I'll be using 18 pips stop loss. 18 pips stop loss. And I'll basically target 50 pips. I told you this strategy can always give you your daily 50 pips. It can give you your daily 50 pips. So let's play price forward and see how price reacts to the breaker block. So as you can see, price moved to the downside. So, and we got tapped in immediately. We got tapped in and price started going down. Price started going down, as you can see. So price started going down. So let's see the reaction. Let's see the reaction. If probably we are going to get it out or hit our TP. So as you can see, we hit our TP, 50 pips. Cool, 50 pips. So I am going to make another example for you. This happens over and over, almost every day. So let's take a look at this point as well. So, and let's play price further. If we see a break to the upside, we are going to go to the 5 minutes time frame. And you can agree with me that we have a break here. You can zoom it. So we have a break here as well. You see, we have a break here with this week. So we have a break here. So when we have that break, the next thing for us is to quickly go to 5 minutes time frame. On the 5 minutes time frame, we want to see a market structure shift. So the moment we see a market structure shift, that is what we are going to use as opportunity to trade to the opposite direction. You need to see a market structure shift. So let's wait. Maybe price will take out this low here. If price take out this low, that confirms a market structure shift for us, and we will look to trade to the opposite direction. So let me play price forward, and we'll definitely see how price reacts to that level. So price keep on moving to the downside. So price keep on moving to the downside. So as you can see, we have a market structure shift basically. So now that we have a market structure shift, we can now look for fair value gap. So we can take our trade from maybe this fair value gap, or basically we have a breaker block here as well. So there's a confluence there. There's a confluence, but let's use the fair value gap and let's use it to take up our trade. So we are going to set our pending order, and our stop loss will be basically 20 pips, and we'll definitely target 50 pips. So our stop loss will be 20 pips and we'll target 50 pips. So let's see how price will react based on that. So let's see how price will react. So price basically miss our entry. Price miss our entry, but had it been let's say we put into consideration the breaker block here. So let's say we put in this breaker block, we would have got tapped in, and at the end of the day we would have smashed our 50 pips once and for all. So this is how the strategy works. I need you to go to your chart and do your due diligence using this strategy. Before you trade with your money, try and backtest this on a demo, and I wish you a best trading career. Peace out, guys.